Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 30th, last day, trading day of 2016. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind everything we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. I'm going to do a little bit of a wrap up for 2016 and give you guys my expectations going forward for 2017. This will be for the end of the year, or this time next at the end of 2017. So where I foresee the markets being. One, crude oil. We got crude oil right now down about 16 cents on the day. I do see quite a bit of movement going on in crude oil, but I think that we're going to see it trade in a pretty tight range for the most part, between 55 and around 45. The end of the year, though, I see it right here, right around $55 a barrel. We might see 60, but for the most part, I think that once we get above 60, that's going to increase the fracking. It's going to drive it back down to 55. The other thing is, a lot of the things that have been going on here in the United States with the presidential election, the sanctions against Russia, one way to only hurt Russia is really to drive prices down, and we could easily start seeing that happening. So I do see it between 60, 45, but at the end of the year, I think we're going to be pretty close to where we are right now at $55 a barrel. The other caveat to that is, the reason being is, I don't see a lot of demand going on. We also saw today in the only real data point that we got was the Chicago PMI pulled back a little bit to 54.6. They also saw prices increasing and were unable to really move a lot of inventories. So that is not a good scenario. We don't really want to see prices going up while inventories start to rise as well, because it makes it very, very difficult for those guys to get rid of inventory as prices are rising. So prices rising when they're starting to move a lot of inventory is good, but the other way around, when prices rise and they can't move inventory, is not a good scenario to have. Then on to gold futures /GC. We've got them down just slightly on the day after yesterday's big rally and got above that 9-day moving average. Gold making a move higher, but I foresee gold finishing the year out at 1,000, right there, just above 1,000. I got the number at 1,024. So into the year, we should see about 125 point pullback in gold futures for the most part. I think it'll test that 1,000 mark and then finish the year just slightly above that. Then on to the bonds. The bonds up about a half point on the day after getting above that 9-day moving average. You can see that we are solidly above that. So the overall bond market kind of trickling higher. Don't really have a whole lot of speculation on the bonds, but with Fed Fund futures, I actually put out there in a Instagram roundup that Fed Fund futures would be at 1.25% by the end of 2017. That then we had the FOMC minutes that's looking like it's in line with what my predictions were, that they were going to have the increase December and then 3 more in 2017, which should put us right there at the 1.25%. Then on to the Dow Jones Industrial Average. Dow Jones down 11 points on the day. This is right in line with what I was talking about we should see this week, as a lot of these major funds are starting to rejigger their portfolios, rebalancing them to make sure that they are in line with what they are telling investors, that they are certain percentage in tech, certain percentage in staples, bonds, things of that nature. When the prices have moved as much as we've seen in 2016, those weightings get out of line. So they're going to be doing a lot of selling and buying to take profits and make their year end look good. Then in January, we could see a resurgence to the upside. For the Dow Jones Industrial Average, I have the Dow Jones going to above 20,000, but I think it was 20,523. So that's what I've got for the Dow Jones Industrial Average. Then on to the Nasdaq. The Nasdaq pulling back quite a bit today, down over 40 points. Again, lockstep with what I was talking about. I think that we're going to see a lot of movement in 2017 and a pretty decent pullback in the Nasdaq, but Nasdaq finishing the year out at 55.77. So that's where I look to see the Nasdaq finish the year off. Then on to the E-mini S&Ps, down slightly on the day as well, still above that value area high, but the E-mini S&Ps for the end of the year looking at 2644. So E-mini S&Ps, quite a bit of upside potential there. This is on the 15-minute chart for the E-mini S&Ps. This is what we saw the E-mini S&Ps do on that Chicago PMI number. Just not a very good number, not really what people were expecting. Those inventory levels, or the inventories number or segment of this PMI number, actually showed a bit of contraction. So not looking really good. And once you dove into those numbers, that's what really caused this overall market to come off the hinges, if you will. And that's about all I got for you guys today. I haven't done a whole lot of trades. I've got several working. Thought I was going to get one of them. I thought I was going to get my Altera, ticker symbol MO. Just hasn't clicked off. I'm only a couple pennies away. Been working that trade all week. I talked about it earlier on in the week. Today's webinar is going to be on covered calls. So when we're in this type of scenario where we're going to see historical highs, a lot of investors coming in right now, it's the perfect time to put on some covered calls. If we get a pullback, that lowers our basis on those stocks that we own, and if the market rallies up, we're going to create a scenario where we are going to be looking at being pretty far away from where it's currently trading. And if it goes up there and goes through our short calls, that's great, because then we've made a substantial move to the upside and profited from that. So I'm going to show you guys how covered calls really aren't as scary as a lot of people out there tell you, that, hey, you know, that call is going to call away your stock. Well, in some regards, if you have that big of a move, that's probably a good thing, and you wait for a pullback and re-enter that trade if that's something in your core portfolio. And I'm going to talk about how that's the strategy that I very first started trading when I was in college to get me into investing. I bought a bunch of stocks and started selling calls against those. So I'll talk about that in the webinar as well. So go to protraderstrategies.com, sign up for that. If I don't see you there, have a wonderful weekend and a happy new year to all of you. All right. Thanks for joining. And if you can't take that, take it easy.